Welcome back to Trading IQ, where we will learn the unlimited nature of the stock market. This is Shourabh Bhattacharjee, and in today's video, I am going to share an analysis of a stock that I had been watching it for over 1.5 years, and I finally invested some amount yesterday. I executed a trade, and I will look to buy more based on some levels that I'm going to show you in today's video. And the stock that I'm going to discuss in today's video, that is Punjab National Bank. This is going to be part of the new playlist, which is my trades, and you can look back at my previous investment, and I have invested in a lot of other sectors such as banking sectors, and then media sectors, and chemical sectors. There are a lot of glass manufacturing sector and diamond sector. So you can look back at those investment, and you can understand my perspective. Of course, I might be wrong in many of the decisions that I made, but I am okay with it because I will stick to my plan. Whatever happens in the market, it does not matter. If I hear news on recession, if I hear news that stock market will going to crash tomorrow, it does not matter because I am looking at all these investments for long term. I'm not here to trade for a couple of weeks or a couple of months. I want to stay invested for long term, and that's why if you look back at my investment, 90% of those investments are those stocks which are breaking out of stage 1 to stage 2 with significant volume, with the backing of a strong sector. That is very important, and that is the part of Stan WEINSTEIN'S stage analysis, and that is the part of his trading methodology that I am just following. So without further ado, let's jump into my screen and let's analyze Punjab National Bank. This is the chart of the Punjab National Bank. So if you watched my last video, I have shared why it is important to keep a track on those stocks which are currently in stage 4 or creating a stage 1 base, because that is the most undervalued stock. Those are the stocks which are undervalued, because if some stock is in stage 4, that means they are falling in price. The price is continuously going down and down from a certain level. That's what we call stage 4, because it is breaking out of that 30-week moving average and it is going down. You see, this is the stage 4. From this top, it has seen stage 4 for many months, many years probably, because it's from 2010 to 2013. For 3 years it has seen stage 4. So these are the type of stocks that you should be looking at, because after stage 4, based on Stan WEINSTEIN'S stage analysis, what happens? Stage 4 happens, and after that stage 1 happens. Stage 1 is after stage 4, after a certain point of time, the price is not going below a level, and it is creating a base around that level and start hovering around a trading range, and then it breaks out of a resistance level that it had created while it was on the trading range. And if it breaks out of that trading range, that is what we call a breakout from stage 1 to stage 2. So I know that I'm reiterating a couple of facts which are obvious, but it is important for you to know, because this is the part of my plan, and a plan is, this is how the plan should be: simple, crystal clear, no complexity. I am not using any such indicators that will confuse you, because this is you have to look at the chart in that perspective. If you look at charts with simplistic perspective, then everything will become simpler for you. So that's how you should look at. Of course, there are other technical analysts. I'm not against them. They have their own proven strategy. You can follow them, but this is what my plan is. So I'm going to reiterate a lot of things because that is part of my plan. So let's analyze Punjab National Bank and try to figure out where it is currently. And you see that it has been in stage 4 for a very long time, and it has been in the news because of NPA and other stuff, scams and Nirav Modi scam. So there are a lot of news, fundamental struggle that it had, but we will focus on the chart itself and purely based on what chart is saying, because this is the collective emotion of all human participants in this particular stock. So what can be better than this? If you look at it, if you study it carefully, you would get a lot of perspectives from it. While this is just green and red candles here and there and lots of lines, but this is a collective human behavior, human emotions. So this is very powerful and one cannot ignore it. So yeah, let's analyze again. Let me draw some key. So you can see this is evident, right? After the stage 4, it tried to create a sort of base around here, right? It took a support here, and then it tried to take a support here, but it could not sustain and it broke down of that range. And once it breaks down of a key support level, it becomes a resistance level, right? So now, after breaking out of this small support level, it created this wonderful trading range. Okay, you see this is a good trading range. It was hovering between what, 46 to 30, 26, 30, around this range for how many years? From 2000, from the time of pandemic, right? It could not recover like other stocks. So other stocks were recovering very fast after the COVID-19 pandemic, but Punjab National Bank, it was in decline for way before COVID-19 happened, right? So it did not matter, and it did not recover like other stocks. Now you see it formed a very steady trading range, and you see there are a lot of heavy green candles. Now compare this volume analysis to its past behavior. You see these are very large candles, but see where this volume candle formed. It formed around this when it tried to break out of that trading range but could not sustain. So this is not a good volume sort of indicator, because it could not break out of that key resistance level. But while it was in this trading range, it saw huge spikes of volume. You see these are the green candles, but you see the subsequent price action, it was sort of hovering around that 30-week moving average, and it was in that trading range. So all along it has been in that trading range. So I was waiting very patiently, and it was in my watch list, not in my portfolio. Now this happened last week, and honestly I was struggling, so I could not buy when it broke out of this range, which was sort of it was 46, but my psychological number was 50, because that's a psychological number, because it has been below 50 for a very long time, for over 2 years. I'm completing 3 years, right? So if it breaks past of that key level, which is 50, with significant volume, now look at this volume bar. Isn't it wonderful? You see 1 billion volume when it is breaking out of this key resistance level, right? Now that is significant. So what happens when after a huge breakout from a key resistance level with heavy volume, there seems to be a little sort of pulling back or retracing back to that level. So yesterday what happens, it retraced back to around 51.50 rupees, around that. So I bought some amount around that level, because this breakout, it is significant, because you see a volume of 1 billion and it is breaking out of a key resistance level, and it has been in this trading range for a very long time. So this is how simple a chart analysis is, right? I'm not saying that it will work, but it has the higher probability of having it, like it might have this momentum from here on and then break above all other resistance level, or it might retrace back from here. So let's now analyze some, speculate on what might happen in the future, because Punjab National Bank saw a level of 279 and currently it is way below, right? It's 53. So sky is the limit. Now let's try to understand some key resistance level that it needs to pass before we could say that it gained more momentum, because it requires more momentum, because on the way up there are so many resistance levels. You have to keep in mind on that as well, right? It's good that it broke past of a very key resistance level, which is 50 with heavy volume, but on the way up there are a lot more resistance levels. So you have to play it safe, because with these type of stocks you have to be very tight on your risk management, because you might see a very good profit in very few months, and you could even see significant loss in very few months, because these are penny stocks. So you have to be very tight or very careful with your plannings, and that's what I try to do. I try to manage my money very efficiently. I'm not sure whether I'm efficient enough, but yeah, I'm getting better. I see that. So this is another resistance level that you see around 60, and 60 is another psychological level, right? So if it break past of 60 again with significant volume, I will buy more. So if I have to take a gamble, this is how I take gamble, because it is breaking past of a key resistance level with significant volume. Now if it retraces back from this level, I have my risk level currently for this stock around 40, below 43, right? I bought it around 51.50, and if it goes below and comes back to this trading range, and the price goes past 43, I will completely sell out all my positions. I'll not be optimistic and try wait for it to recover again. I will take a loss and I'll completely remove myself from this position, right? However, I see a positive momentum in this stock, because it break past of this key resistance level. If it break past of this 60 level with it does not have to be as significant as 1 billion volume like you see around this breakout, but there has to be some momentum of green candles. So now I see that there are some demands around this area, because it tried to retrace back, which it did as per the rule, and it is now moving upwards. So I see there is a momentum, and then volume is dying down. That's again important. So if there is a red candle, means there were more selling pressure, but you see the subsequent price action, it is not moving it is not moving rapidly, and that is a good sign, right? Volume has to die down, and there has to be some momentum of green candles, and when you see a red volume candle and the subsequent price action is not that rapid, I think it's very good sign, because that's a healthy sign, because there are some investors around this area who is trying to take some profits, and which is fine, because they haven't seen such level for 2 years. So there were so many buyers or investors around 30-40 range, and they were stuck for 2 years because they did not see any profit, and they would take some profit around here. So here, what is going on around this point? Here, weak hands are selling, because they were stuck on this stock for 2 years, and when they see such level, they are trying to get away with whatever profit they could generate, or try to get even and get out of it. And strong hands are entering. So that's how your goal should be. Like, you cannot know where the strong hands are. Now these are the analysis which increase the probability, and that's what we are after, because this is a probability game, and you have to be available for whatever opportunity you see based on your plan, and you accordingly have to execute it. So I have executed around 51.50, and my risk level is below 43, and if it goes past of 60, I will again buy, and it is yet to be seen. I'm looking at very carefully, and my money management on this stock has to be very tight versus other stocks, and I will not be optimistic if it goes below this and it comes back to this trading range, because it might happen. right? So I'm prepared for the worst, and I'm prepared for the whatever the best outcome that it will unfold. I hope you like this video and you're liking my approach, and if you do like it, please hit the like button. Please subscribe to my channel. Please share it with your friends and colleagues who are beginners in the stock market or who needs new perspective. They are in the market but they are not doing great and they need more new perspective. So my perspective can also help. This is WEINSTEIN'S trade analysis approach that I'm pursuing. And I also do videos on trading psychology because that's again very important. This is just 10% of the execution, because now when I'm in this trade, there are so many factors that I can get worried about, right? But I cannot do that. If I do that, then there is no point of investing in the stock, because your mindset has to be clear what your plan is, and it has to be crystal clear. Now, if I change my plan tomorrow, what's the point of this plan, right? So you got to stick to your plan, and how can you do that? You have to work 90% of your time on your trading psychology, and 10% of your time keep it, executing your plan, and keep it simple, right? Again, thank you for watching this video. Please do subscribe, and I'll see you guys on my next video. Thank you and have a great day.